Howdy, folks. I finally got my office back. My son's about to leave this afternoon, but in the meantime, I can use the office. So let's go through these charts. I don't want to make this video long. I always say that at the beginning, and it always turns out a little bit long, but let's have a look at this quickly. This is natural gas. Let's start with this. This is the interesting one. We've dropped down to the support level. This is the 78.6% Fibonacci level, where we're at right now, and we're holding pretty steady. Now, I added an additional 25% onto this trade, which puts me at 75% long, an average price of $2.66. So that's where I am at the moment. And I've put a very tight stop loss below that additional piece, and I'm willing to hedge the rest below $2.45 at $2.43. So this additional 25% has a very small stop loss, and I'll take that out if it moves lower. And the rest, the other 50%, I'll hedge at $2.43. But so far, so good. I think we're still, basically, if you have a look at my last video, I'll link again at the end of this video to that overall analysis. And as long as we're above 245, I'm happy. We've got this triple bottom in place, as you've seen before many times, I'm sure. We're at the 78.6% Fibonacci and holding there. I don't know how long for and whether it's going to be solid there or not. We'll have to wait and see. But if you have a look at the day chart, and I've kind of redrawn this day chart just for you, to make this look a little easier. So this yellow zone here is the new range that we're in. That's the range above $2.45. And you can see for most of this year, we've traded below the range. And then middle of June, towards the end of the June, we broke up into this top part of the range and retained the sort of move up this channel. And the channel we remain in. And this 78.6% Fibonacci that we're at right now is near the bottom of this channel. That's a pretty key level. If we do get down to 245, we will break the channel. I'm not too worried about that because the horizontal lines are more important than the channel lines or the trend lines. If you have to choose between the two, choose the horizontal lines rather than the trend lines. Markets trade off levels. I know a lot of people are very fond of trend lines and they do play a role, but if you're going to have to decide if we break down through a trend line, whether the horizontal line is more important. And often these trend lines will break because robots and algorithms and traders, cunning traders, and positions and also market makers try to push the markets through particular levels which traders mostly look at using traditional trend line methods, break those trend lines and then promptly reverse. And we see that time and time again. So if we do break down through this channel to 245, I'm still not too worried. And in fact, if we break down through 245, down into 243, and I get hedged, I'm still not worried because then I'll be hedged, my average position, 266. I'll be hedged at 243. There's no train smash. Then we can just sit back and wait and see what happens. But so far, we're holding above that level. So actually, for about 5 or 6 4-hour candles in a row, we haven't dropped below this level, but it is forming what is potentially a bear flag. If you have a look at it on this 4-hour chart, it is potentially a bear flag. But sometimes these just reverse out of the blue, particularly with natural gas. You see it often enough when you form these sort of flag patterns. Suddenly it shoots off in the opposite direction. And you see it at the tops and at the bottoms. So even that doesn't really worry me too much. We did have a little video, and you can go and Google it, from Energy Rogue. They put up they think they did a live stream yesterday on the hurricane season coming up and the effect that hurricanes have on the price of natural gas and demand and supply and that sort of thing. And it seems that with hurricanes, because most of natural gas is now produced onshore rather than offshore in the past, hurricanes used to disrupt supply, but now they actually disrupt demand. So, which is negative for the price of gas, and gas storage begins to fill up and price comes down. So be aware of that. The hurricane season is approaching, and they drew a little pip with sort of weather map of a couple of hurricanes approaching all the way from Africa. Apparently they drift across the ocean, end up on the east coast of the US, and then sort of go inland from there, which can disrupt not so much supply but demand for natural gas and drive the price down. So be aware of that. That season is coming up, and it's expected to be quite a significant one. So because of various temperature fluctuations. That's all I want to say. WTI. So I'm going to come back to WTI has just sort of dropped down, and Brent crude has just dropped down to these support levels. WTI at around about 78.5, somewhere around there. I'm not trading gas I'm not trading oil at the moment until we get down a little bit lower. I think we can get down to the 200 moving average. This is WTI and this downward trend line, which goes back a long way. And I think if we can get down in here, if you look at the commitment of traders report, it's not all that bullish for oil. And too many people on the long side of actually both gas and oil, too much influence in the market in the way of positions just being, we talked about a crowded trade in one of the last videos. This is a classic crowded trade. Everyone's bullish on oil. Everyone's talking about oil pushing up inflation. Everyone's talking about problems with Saudi and cutbacks in supply from the Saudis and various other countries, and that we're going to be sort of to the moon on Brent crude and on WTI. So the long side is very crowded. So I think we could see quite a big pullback down to this, potentially this purple line and these green lines below us. That could take us all the way back down to close to 74, maybe even $70. Probably not 70, maybe 74, 75. That's this purple line here and the top of this downward descending trend line, and also where these two moving averages are. The purple one is the 200-day and the red one is the 50-day moving average. Now, I'm going to cover one more thing. I was going to cover things like currencies and let's just have a look at gold while I'm here, gold and silver. So we took long positions on gold and silver today, earlier on, and let me just show you why. I think, again, this is probably an overcrowded trade, but it's worth a go. And I've got hedges beneath our position, but we've drifted down. We've got 9 days. This is day number 9 of downward movement, dark candle days. So after 9 days, you often get a bounce at least, and we're seeing that already. So we bought some at $1,903. We're at $1,893. We're at $1,898 now. So we've sort of moved up $5 from my entry price, which is okay. This is a very key support level on gold. Whether we're going to hold or not, I don't know. We've got to make some significantly higher highs and higher lows on the day chart. We're nowhere near that yet. We've got to get up into well above 1,900, up into about 1910, 1920, maybe 1925 before we could say we're actually moving higher. This is an overcrowded trade. Everyone's bullish on gold, no matter where you look, no matter who you listen to, no matter what reports you read, no matter what YouTube channels, what Twitter channels, what newspapers you read, no matter what you hear from banks, it's all long gold at this level that we're at right now. This technical level's too obvious. I'm very skeptical about it. So I have a tight hedge position on here, and I'll immediately hedge this if it doesn't move up, which it very well may not. I'm very skeptical of it. And the commitment of traders report shows that there's no real offside position on gold or silver. So silver actually looks a little bit better if you look at the commitment of traders report. And we took a long on silver right at the bottom this morning, actually literally at the bottom at 22.40 or 22.47, I think we got in, and we're at 22.75. So that's moved up sharply today for the same reason. This yellow zone is our buy area. This is the demand zone. It's a very strong demand zone. It's also this rising trend line. I don't have any moving averages on here, but this yellow zone, you can see it goes back a very, very long way, all the way back into 2020. So every time we've got here, the price has bounced very dramatically, very sharply. We're falling back into that zone right now. That zone extends all the way down to 2150. So we're going to have to be prepared for silver to get as low as 2150, and very similar to what we saw on the channel in natural gas, we could see a channel line break. I haven't drawn a channel, I've just got a trend line here, but we could see a break of this if I clone it and move that up to the top. I suppose it is a channel. People like to draw. Yeah, I suppose, there we go. It's good enough as a channel too. So let's just leave that one in there. So this is the channel. We could get a channel break and down to the bottom of this yellow zone, which would take us down to 2150. We're now at 2275. We got in at around just below 2250 for a long position, and that looks quite good. We've already moved stop losses up to protect most of that position. So if it goes against us, we'll have lost a few cents really. So nothing all that serious on silver, and looking quite good. The one thing I want to look at out of all of this, I'm not going to go into currencies, but I will talk quickly as we skim past from right to left. Stocks, I'm short on NVIDIA, had this position for quite a long time, been basically taking profit at that. We took profit right at, was very lucky. Don't call me a good timer of the market, because often I'm not, but we managed to get in right at the top after this 3 evening star doji pattern, three wise men type stars right at the top here, got in right at the top, and we actually literally exited half of our position right at the bottom, moved the stop loss to break even at 265. It's now 255 after taking some profit off, and which is above this high from yesterday, day before yesterday. If we get up to above the day before yesterday's candle, it'll hit our stop loss, but it'll also be a technical reversal. Hoping for a move down on NVIDIA. We're below the 20-day moving average. The stock markets have all moved down. Everything's moving down. You can see in the pre-market, NVIDIA is just bouncing. That worries me a little bit because I'm not too sure if we're going to hold beneath or if we're going to go back up to the underside of this trend line. But if we do carry on moving down, my targets are first of all $380, and then $345, and then $320 to the bottom of this overall gap, this earnings gap. So that's what I expect on NVIDIA. Now, what we're seeing, though, is that the dollar may come off today, and that could drive stocks back up, and including the NASDAQ, the S&P, and so on. And so we've taken a small position long on NASDAQ to hedge against that short position on NVIDIA, and we bought NASDAQ right at the bottom here, at the really at the bottom, 14,890, somewhere around there. It's like just below where we are at the moment, about 20 or 30 or 40 points below where we are at the moment, basically at the bottom. And that position's partially hedging the NVIDIA trade that I have on. And the same goes for all the stocks. I think we could get a bounce today. We're already seeing it on NASDAQ. We're seeing it in the pre-market on NVIDIA, Apple, Microsoft, AMD, all bouncing up a wee bit. If you're talking about chip stocks, if you're talking about the NASDAQ and stocks in that tech field, technology arena, I like the look of the chip stocks overall. AMD looks really bearish. Overall, just as a picture, you can see these dark reversal candles. This chart's dominated by bearish black candles all over the show, and we continue to move lower. I think there's a chance for AMD to move down into the $92 to $94, perhaps even down to the $90 region where the 200 period moving average is. If we break down through this black moving average here, that's the 100-day moving average. Next stop is down to this to clear this gap below us, really. Although it's been cleared from the upside already, we could clear it again from the downside, going down, and then head down towards this bottom, but possibly the 200 period moving average. So NVIDIA, AMD, the two big chip stocks are the ones to watch, I think, when it comes to stocks. And Microsoft, this one I'm actually looking to buy, and I'm looking for this sort of pattern. I know it looks pretty, and it's just a random picture that I've just drawn on the chart, but it coincides with the way I think I'd like to trade this, and I think this is what we could see on Microsoft. There's no reason to believe that Microsoft is going to be one of the weaker stocks. They've got fantastic software. They're building in AI. It's used ubiquitously throughout the world. They have advertising, not as much as Google, but Microsoft has Bing advertising, whatever it's called nowadays, something, whatever it was, I think it was Bing, maybe it's Bing now. But Microsoft advertising, they've got, which will come off a bit, but they won't be affected as much by economic downturns as someone like Google, with YouTube and Google AdWords revenue being one of the really big sources of their income. Microsoft's got all the software and all the AI they're building into it, which is really quite supportive of this stock. I think if we get down to this green line here, which is the, well, we're at the 100 period moving average, maybe just to poke through it and then back up. And this green support line is a pretty key level. If I just zoom this chart out, you'll see why. Okay, so we've caught up now. So this green support line goes all the way back to over here, and that's April 2022. That high there and these highs here is an area of supply and demand, pretty key level. And also if we zoom in a little bit, you can see over here, it was both support and a resistance. So I like that level, and that level on Microsoft is at around $314. If we can get down there, I'll be definitely looking to try and try at least some starters on Microsoft. So I think generally short the chip stocks. NASDAQ might just rally. I don't know. Who knows what these stocks are going to do, these markets. But if we're going to be buying, I think it's going to be Microsoft. And if we're going to be selling, I think it's going to be chip stocks. Now let's have a look at the dollar index. And this is a key number today, because the dollar index is going to affect everything. It's going to affect the price of commodities. It's going to affect the price of gold. It's going to affect the stock market. It's going to affect the yen pairs. It's going to affect gas and oil, everything. And when the dollar drops, everything else goes up, basically. Dollar down, oil up, gas up, gold up, markets up, everything up. And that's what we're hoping for, really. So we're hoping for all of those things to go up. We're seeing the dollar actually is at this very key level. This is the dollar index, and this is a beautiful pattern. We've moved up to the 78.6% Fibonacci, and we've seen the 786 come into play so many times recently. It doesn't often happen. It's not one of those frequent Fibonacci numbers that get visited all the time. It happens quite infrequently, but it's happened a lot recently. And this level here, this red line, is at the 78.6. And just by glancing across on the chart, you can see why. Don't need to tell you why it's an important level. You can see by anyone, any kindergarten child could see why this level is significant. And that's at 103.60 or so. And look what's happened. We just touched that level perfectly, literally to the pip today. It's a double top going back into July this year. We've just touched it and fallen back down sharply. And as we do that, we'd expect, as we move down on the dollar, we'd expect to see the stock markets move up. We'd expect to see gas and oil and gold and everything else move in the direction that we favor, including the euro and the pound against the US dollar. And I'm slightly long on the euro and the pound as well. So let's see how all this works out. The key to it all, though, after having said all of that, is this chart that you see right in front of you. Can the dollar stop its progress upwards today and move back down into this downtrend and not make a new higher high? This is the higher high, or the high, this double top that it has to break to make a higher high. If we don't make a higher high here and begin to move down quite significantly, the dollar should be on its way back down again. I don't know for how long, but probably at least down to 102, which is where this previous low was. So, and these spikes, these wicks over here. So we're at 103 now, 102. That's about, well, it's about 1.5%, something from the top, 1.5%. Quite a big move. We could see a 1.5% rally in the stock markets, in gold, in other commodities as well. If you've enjoyed this content, please give the video a thumbs up. I'd really appreciate it. It helps the algorithms to recognize that people like this video, and it'll help me get, I think we're just over 6,000 subscribers now, which is fantastic. I really appreciate all of you joining up here. But if we could get a little bit further than 6,000 and make sure we don't slip back below there, I'd really appreciate that. So if you subscribe to this channel, you'll also make sure that I stay above 6,000, and you'll make sure that you'll get further updates as they come out, particularly if you press the notification bell. And also, why not share it with some of your friends through your social media? There's a share button on there as well. Have a fantastic trading day. I'll speak to you very soon, and good luck.